Hello and welcome to Duke Williams online session for financial management. We'll be looking at practice questions and answers. And we'll be looking at the blended learning number 1, questions and answers. This session will be looking at 10 questions from session A of our financial management exams. 10 questions to practice session A questions. Please ensure you have downloaded the FM Blended Learning 1 questions. FM Blended Learning 1 questions, so that you can follow me with the calculations and the discussions. My name is William Amma, and thank you for joining me. All right, so let's start by looking at the FM Blended Learning 1 questions that you have downloaded. In the session A styled questions, all questions are compulsory and must be attempted. But I've selected 10 questions for us to practice with. And each question is worth 2 marks. So let's look at the questions that we are going to be practicing with, and to ensure that we can improve our chances of passing the exams. Now, in the blended learning 1, question 1, so it's question BL1, that is blended learning 1, question 1. The question goes like this: which one of the following is not, and I have to circle this one, is not an interest-bearing money market instrument? Which one? Only one. So we have 4 money market instruments, but which one of the following is not an interest-bearing money market instrument? Now, the main thing that I want you to observe here as you practice is that when you come to money market instruments, they are instruments which we often refer to as short-term financial instruments. They are short-term financial instruments, and they are traded on what we call the money market or the bankers market. They are short-term financial instruments, often within 1 year. Now, the instruments that are traded on the money market largely fall under 3 categories, and I want you to be able to review your notes to know the 3 broad categories that the money market instruments will normally be captured. 1, no particular order, it is either interest-bearing instrument or it is discounted instrument. Discounted instrument means that whenever you are buying that financial instrument, let's say you want to buy 10,000 of treasury bill, even though it's 10,000 you want to buy, the amount that you pay to buy the 10,000 may be, for example, 9,500. So you see there is a discount on it, but eventually in 90 days they'll pay you 10,000. So you don't pay 10,000. Even though you wanted to buy 10,000 treasury bills, for example, you pay 9,500. So that in 90 days, you get 10,000. That is why we call it discounted instrument. Then we have the last one that you also need to review will be derivatives. They are financial instruments that derive their value from other financial assets. They derive their value from other financial assets. Now, having these 3 in preparing for the exam, be able to list all the instruments that are categorized as interest-bearing or discounted instruments or derivatives. So in no particular order, we have something like money market deposit. Money market deposit. Another interest-bearing instrument is certificate of deposit. We call CD. Certificate of deposit. Then we also have repos. We have repurchase agreements. Now, examples of discounted instruments. And we have it to be treasury bills. Very, very popular when we come to discounted instrument, treasury bills. Then we have bankers' acceptance. And then we have commercial paper. Commercial paper. So know some of these ones. Then derivatives, we have something like futures, forward contract swaps, options, and so on. So please ensure that you have gone through your notes thoroughly. You know how to categorize money market instruments. Besides they being short-term financial instruments, know how to categorize them. And once you know how to categorize them, you should be fairly able to attempt some of these questions. So which one of the following is not an interest-bearing instrument? By the table that we have, obviously, the answer is A, which is treasury bill. It's a discounted instrument. It is not an interest-bearing instrument. That's fine. Now let's go on to question.